Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Peter Barrett. Peter is the CEO of SMBC Aviation Capital. He's joining us for the purposes of our Aviation Leaders Report. And I should say we're recording this in early January. Peter, thanks again for joining us. Always great to get your insights. Before we get into the meat of the conversation, do you want to tell our watchers, most of whom will know a little bit about SMBC Aviation Capital?
Sure, thanks Joe, and thanks for inviting me. Always good to be here and good to be doing it in person back again after a few years. So SMBC Aviation Capital is now the second largest global aircraft lessor. We're owned by two of the largest institutions in Japan, SMBC Group and Sumitomo Corporation. We're headquartered here in Dublin. And we have a fleet of owned, managed and ordered aircraft, about 900 aircraft. Primary focus on young, new technology narrow-body aircraft. Global business, about 120 customers around the world. About 260, 270 people. So it's become a pretty big business now in the last couple of years.
And maybe Peter, building on the enlarging of that business in the very recent past, can you talk to us a little bit about the Garfunkel Acquisition, which just closed last month, just what that is bringing to SMBC and how you see that evolving in the near term?
Sure, okay. Well, first of all, I mean, obviously we're delighted to close the deal. As I'm sure you know, Joe, on the advisory side, getting M&A deals done takes time and a lot of work and effort, so it's good to get it over the line. And I think it brings a number of things to us. I mean, I think, we think Garfunkel is obviously I think it's a good business, a very good match in terms of portfolio. It's a team of people there who I think will add a lot to our business as well. And it also gives us scale and momentum, I think, at an important time in the industry as we come out of the pandemic. So I think it brought a lot to the table. It's a deal of scale, 6.7 billion. I think we got it at a good price. I think the circumstances of the deal mean we got some good value, I felt. And it's big enough it's going to really move the needle for us, but not so big it's going to overwhelm our business. So we think it's a good transaction for us, both in terms of fit, in terms of assets, people, and in terms of the kind of what it brings to the table in terms of the business scale and performance. So I think it's closed now, as you said. We closed it just before Christmas. So it's good to get it over the line before the year end. And now we're in the integration phase. So we're looking at, how to bring everything together, how to bring the systems, the processes, the people, the assets, how to bring all that together. Now we've done a lot of planning and a lot of work on that, so I'm confident that we'll get all that done in the next number of weeks and months. But it's still a piece of work that we need to get done. So that'll be a key priority, particularly to the first half of this year for our business. And I think in the more medium to long term, then I think it consolidates our position as one of the leaders in the industry. As I said, it gives us scale. It'll help drive our profits and profitability over the next number of years. And also it'll give us, with young narrow-body aircraft, it gives a good feedstock as well for our trading activities. As you probably know from previous conversations, Joe, we trade a lot of aircraft, and we think this is going to be good feedstock as we sell into what's going to be, I think, a good market over the next number of years.
You're really interesting stuff there, Peter, and I think a couple of points we'll probably come back to as we're going through some of the topics today, and maybe bringing us back to customer performance. As you say, huge breadth across the entire aviation space. Can you talk to us a little bit about how you saw airline customer performance evolve as the recovery continued to take hold over 22, and just where you're seeing opportunities in this market?
Sure. Well, I think first, look, don't get away from it. The pandemic was really tough for our airline customers. Tough for the industry generally. Tough for manufacturers, tough for lessors, but really tough for airlines. I think it put literally things stopped. So, I think 20 and 21 was very much about getting them through that. And, there was some hard conversations, but we worked with our customers to try and get them through that. I think 22 is very much a story of recovery. So what we're seeing is, and it starts in different places and the pace is different, but the general theme is once people can travel, they will travel, and that we saw that very clearly in 22. So we saw airlines' performance beginning to improve, cash flows beginning to improve in terms of payment records, payment performance with our business improving pretty markedly and pretty rapidly over the course of 22. And then probably what you saw really from the start of the last summer was not was it just a recovery, but actually particularly for strong airlines that came out in a good place, saying how do we take advantage of that? So people looking at how do we get additional lift. How do we think more about refleeting? How do we think about getting, particularly in a what's obviously quite a high fuel environment, how do we get more fuel efficient aircraft? So I think what you saw pretty rapidly in 22 then, particularly in the second half, is going from the recovery part to okay, how do we now that we're kind of back on a stable footing, how do we take advantage of that in terms of this market that's clearly bouncing back probably more quickly in some cases than people anticipated. So I think what we're seeing is that continue into 23. Yes, are there challenges and some headwinds? There certainly are on things like the geopolitics is uncertain, but I don't think it's going to have a huge impact in 23. But we certainly see things like interest rates and potential for recession in some markets. But there's still the dominant theme is recovery. I think it's still that sense that the pent-up demand that we saw in 22, that's continuing to drive into 23. I think we're seeing it in Asia most clearly in the start of this year. I think with the easing of the COVID restrictions in China, we're going to see a big bounce back in China in the next number of months and through the rest of this year. So overall, I think the themes we're seeing in 22 are ones going to continue into 23. You're also seeing, and I think sure we'll touch on this later, is that there continues to be some challenges with the manufacturers in terms of getting airplanes delivered on time, on quality. So I think that's driving some demand as well for used aircraft. If I look at this time last year, we had a pretty decent number of AOGs, airplanes that were on the ground. We worked through those very quickly, particularly in the second half of last year. We're literally down to what you'd normally have in a normal market in a portfolio of our size. You'd probably have a small handful of aircraft on the ground at any particular point in time, and we see good bids for younger narrow-body airplanes, 737s, A320s. We think that market's is going to play pretty resilient for the next while.
Yeah, and that speaks a lot, Peter. I'd say on the opportunity side, say very positive. Maybe we'll have some recession in parts of the world, but you say pent-up demand and the reopening, particularly in Asia Pacific and China. Can you talk to us, you touched on some of those issues there, around maybe the uncertainties that are there in the macroeconomic and the geopolitical environment? We've obviously had Russia probably have an outsized impact on aviation as a sector, interest rates, US dollar, inflation. Just how challenging is the macro environment making kind of medium-term planning for the business?
I suppose it's challenging, but I don't think it's any more challenging than it has been generally in the industry. I mean, if you think back over the last 30 years, Joe, there's been lots of things that have happened in my career over the last 30 plus years. And I think the industry has proven to be really resilient. I think airlines have proven to be more resilient, and they've got better at managing these types of event risks. I think one of the definite takeouts of the last couple of years is that the aircraft leasing industry is a really resilient place to invest, because I think leasing companies have generally done, they weather the storm well. I think the stronger ones have become stronger. I think they've generally, I think it's been a good. While it's been a tough couple of years for the industry, I think it's kind of good in terms of, I think it's proven out the industry pretty well. So I don't think it's any more difficult than normal. Clearly there's a lot of uncertainty in the world, but also, there's also a number of certain things in the world, which is continuing demand, as I talked about. I mean, we see that. I think the forces that drove our industry for the last 30 years, they haven't gone away, and they actually reasserted themselves pretty strongly and pretty clearly once the pandemic ended. And once the restrictions were lifted. So yes, has Russia brought challenges? Clearly it has. It's brought real economic challenges to lessors, including ourselves, who've got aircraft, who've lost aircraft in Russia. But also I think it's, again, on the other side, even with the higher oil prices and the fact that market effectively is being closed off, the industry still has proven to be very resilient. I mean, we haven't seen a lot of spillover in terms of demand, dampening of demand. Maybe a little bit on the peripheries of Russia, but other markets have really kind of just moved on. Yes, fuel prices are higher, and that's a challenge for airline customers. But again, I think they've adapted well to that. Pricing demand is still pretty good for the customer, so you're able to pass on a lot of that to the airline customer, to the consumer. And I think it's been good for businesses like ourselves, who've got a lot of young narrow-body aircraft, and airlines are saying, yes, we want the more efficient aircraft. Those airplanes that you have in your order book, we need them both in terms of growth, we need them in terms of the environment, we need them in terms of cost savings for fuel efficiency. So, yeah, I mean, I think it's a challenging environment, but I think that's aviation. That's my experience of the last 30 years, and I think that's what we need to do as leaders in the industry, is make sure that our businesses are resilient and able and adaptable, and we can rise to the challenges, whatever they might be. And it's, as we've seen, particularly in the last 12 months, 36 months, very hard to predict them. But be in a position that you can manage those challenges, but also take advantage of the opportunities. And that's something we've done a lot of over the last kind of 24 or 36 months is to try to see this both as obviously something very challenging, but also as a place of opportunity. We deployed a lot of capital in sale and leasebacks. We touched on earlier, we've been active in the M&A market. So I think, yes, it's a uncertain environment, but that also brings some opportunities as well.
And I suppose one of the uncertainties or movements we've had over the last 12 months has been interest rates. Sitting down a year ago, we both would have said interest rates are going to go up. And I guess historically they're not at a massively high level, but it's probably the pace of change which has caused challenges. Can you talk to us about how those interest rate increases have impacted on the business and just how you're seeing them correlate from a lease rate factor perspective?
Sure. Well, certainly, I think, just to step back a little bit, I do think the world generally, not just aviation, had got very used to what I believe will be seen with the benefit of hindsight as a probably a bit of an aberration. This period of very, very low interest rates, very high liquidity, I think is very unusual. So I think we're getting back to a more normalised market. Yeah, the pace perhaps at which that happened was faster than people might have expected, but I don't think that interest rates of 4 or 5% that's not abnormal. That feels more, certainly from my perspective, more normal. So I think it's something that's we're as a global economy, we're going to have to get more. I think that's going to be what it's going to. That's what it's going to be like for the next, certainly I would say, number of years and possibly longer. I think for our industry, it is clearly going to have present some challenges, particularly for people who aren't in a strong financial position, perhaps people who haven't had to have planned well for a more volatile interest rate environment. I think for our own business, we've always taken a very prudent view around hedging, so we've always matched hedged our assets and liabilities. So if we have a fixed lease, we'll put in place fixed funding for it. So we kind of have locked in a lot of our margin for the next number of years. So I think that's going to stand us in good stead in terms of business performance. And as a part of a big FI, we've got access to a lot of capital, a lot of lines in terms of how we can hedge our books. So I think it's going to be quite they'll be quite beneficial for us in the next period of time. In terms of the impact of interest rates and lease rates, we're certainly seeing it. There tends to be a lag effect, so I would say somewhere anywhere between kind of 3 and 12 months, depending on the particular market with a particular type of aircraft. But lease rates today are materially higher than they would have been a year ago, both for new and used aircraft, and they're higher for two reasons. One is what we touched on already. One is demand, and the second reason is interest rates, because the input costs, being money, are simply higher in the same way that fuel costs are higher, labour costs are higher, ATC costs are higher, so are interest rates. So therefore, the capital cost of aircraft are higher, and that's something we're passing on to our customers because we have to. So I think interest rates, it's not, you can't draw a direct line from day to day, but there's definitely it's having a material impact on lease rates, in the sense they're going up to match those increases in interest rate.
Can I get your perspectives then on the debt market? You mentioned you guys have always benefited for a long time from having a very strong parent behind you. You then have the IG rated lessor community, the ability to tap the unsecured markets. Obviously that has been a little bit more muted this year, just given the environment we've been in. Can I get your thoughts, if you don't have a strong parent and if you don't have that access to the unsecured markets, how challenging is the environment out there now on the debt side?
I think at the moment it's pretty challenging. There are still pockets of liquidity, but I think a lot depends on what you're trying to achieve. I think if you're trading and buying and selling a couple of airplanes, relatively small numbers of airplanes, and building a niche and building a business for yourself, I think there's opportunity. I think the challenge comes with scale. And I think that's why, going back to the earlier part of our discussion, I think scale does matter, particularly in the financial markets. So, if you're going to be a business with 5, 10, 15, 20, 25 airplanes, doing bilateral secured financings, bespoke financings is, it's something you can do, and there's pockets of money, and you can probably find a match for a particular aircraft with a particular counterparty, with a particular bank or financier. So I do think there is a level of liquidity there. I think the challenge comes if you're trying to do it at scale, and I think that's why there is an element that the big lessors need to have access to IG money and need to have access to a broad, deep market of funding. And I think that's something we're going to see as a theme, I think, over the next number of years, is that there will be an element of the smaller player, kind of a niche player, I think will have a place there. Then there'll be, I think, a relatively small number of very large players who will have access to a broad range of not just capital markets, but a broad range of financial products, private placement market, the bank debt markets globally. And I think that the real challenge is going to be when you're in between those two places, because I think you scale doing, ones or twosies, bilateral secured financing for one or two aircraft. Doing that at scale is just, I think it's very difficult.
Yeah, no, it's keeping with a theme, I'd say, some of the conversations we've been having for the purposes of the report, and it does seem as if that scale point, which is always important, seems to have increased in importance. This could be how long is a piece of string, but what is scale anymore, right? To get your thoughts, because you look at Goshawk, or you take the AMCK example, it's that 150, 180 odd aircraft that you would have said, well, that's a $7-8 billion platform. Is that just not enough if you want to be, as you say, one of those top 10 guys that can play in lots of different elements of the available liquidity that could be out there?
Yeah, I think so, but I think it's changed over the last 20 years. I mean, when I think back to when we started this business, over 20 years ago, 21, 22 years ago, I mean, we were talking about what's the scale we needed to hit, and how do we get there quickly, because we felt that time was important, and to get there. And I remember distinctly having the conversation that it was 5 billion, but that was a smaller industry. There was less players. The scale of the industry was different. I mean, I think it's just changed over time. Now, what's the right number? Definitely, it's more than 5 billion now, and I think it's more than 10 billion, and that's going to change and develop over time. So, but it is a factor. I mean, I do think, and I think, frankly, as the industry has become more commoditized, it's become more competitive. I think, as you see in every industry, it's not unique to our industry, that sense of scale and economies of scale and efficiencies and access to markets, and both on the money side and the supplier side and customer side, it's going to become more relevant, and the number is going to change as the industry changes.
And maybe looking at leasing on the macro side, we've seen over the last 2.5 years, probably a deepening of relationships between lessors and airlines, and hugely important to airline survival in lots of instances. We've seen airline balance sheet distress, and so the leasing channel has clearly increased in importance, and we've seen the 50% threshold breached. Can I get your thoughts on whether that step change is kind of sustainable and that trend will just continue as it has over the longer term to tick upwards? Or do you think there'll come a point, where airline balance sheets will hopefully start to recover and they might step back a little bit from leasing?
Yeah, I think it's a good question. I mean, I think the long-term secular trend, in my view, is going to continue. Look, I mean, does it continue forever? Because by nature, by definition, it can only get to a certain point, which is 100%. I don't think it'll ever get there. But I think the relative importance of leasing is going to continue. I think the lessons learned, and indeed the scars that are being borne by the airline industry over the last 3 years. I mean, I think the lessons being, lessors give you more flexibility. I mean, it's if there's an event like COVID, you can at least have a conversation with the lessor. You can't really have a conversation with the bond market. I think a lot of CFOs and a lot of big airlines actually realise that you do have there's a whole bunch of flexibilities that not just the obvious ones that leasing brings to the table, and also, I think there's still a lot of collateral damage to the balance sheets of airlines that needs to be recovered. So I think their ability to borrow significant amounts of money will be relatively limited. So, and look, and I've always been the view that the direction of travel of our industry, and I'm sure I'm on the record of this before, is that in the longer term, companies like SMBC Aviation Capital, investment grade, with strong backers, with a very broad balance sheet, with global reach, and others like us, we're good at owning airplanes and managing them and doing we're a financial services company, so doing the financial services thing like, owning hard assets and leasing them, that makes a lot of sense. Airlines are operating companies. They know, a lot about, scheduling and passenger demands and operating and, getting people from A to B and cargo from A to B. They're two kind of separate disciplines, and I think, in the longer term, I think what we're seeing, a bit like the hotel industry again, which is something I've talked about in the past. If you go into a hotel, the high probability is that the operator of that hotel does not own the building. I mean, why would they? Why would Four Seasons or Hilton or wherever own a whole bunch of properties in different markets around the world, different types of properties? They're focused but they're really good at the brand and the thing and filling the bedrooms. I think the same is happening in our industry. I think the ownership of the assets and moving them around the world and financing the most efficient way fits best with the large leasing companies, and the operating of those assets and making sure that they are doing what they should do in terms of operating and generating revenues fits best with the airlines. And I think that trend is going to continue.
And maybe moving to the investor side, Peter, can I get your thoughts over, have we seen any evolution in the types of investors coming at aviation finance kind of post-pandemic? Is it still, you guys have been heavily backed by Japan. Japan loves aviation, always has for a long, long time. Private equity's always been around, maybe arguably a little bit more in recent times. Can I get your thoughts? Have we seen any interesting trends over the last couple of years on the investor side, or is it still the same types of investors, albeit the names are changing?
Yeah, I think it's probably, so two parts I'd answer that question. First of all, it's probably a bit too early to tell, I would say, because I think we're still in that part of the market where people are beginning to figure out what they, what's up and what's down, so to speak, and what's moving, what's not moving. So I think it's probably not, I think it's probably not 100% clear yet exactly what the long-term impacts in terms of who's in this market. But having said that, I do think it's probably, whatever change there is going to be, I think it's going to be probably around the margins. I think the fundamental pools of money that have played a significant role in this industry over time are going to continue to be there. Some of them might get a little bit bigger, some might get a little bit smaller. You'll have some new entrants, but I don't think you're going to see a fundamental change. And, as I said earlier, one of the interesting things I think about the last 3 years, maybe possibly even longer if you include the grounding and the MAX in it as well, the aircraft leasing space has proven to be a pretty resilient place to actually, it's kind of come up pretty well. And yes, you might have some challenges and you'll have some restructurings, but assets recover, demand recovers, cash flows recover. So I think it's been seen as an industry that remains attractive for mainstream different types of capital investors, and I think you're going to see them continuing to play in the space. So I think there will be new players, and in fact, one of the things we spend a lot of time focusing on in our business is we probably have a bigger trading team than most of our competitors, because we think having multiple routes to market maximises liquidity, and we spend a lot of time investing in new markets and seeing are there new places we can trade aircraft or new pockets of investors, and that will always continue, and I think it's going to continue. But the fundamental things, the big pool of capital in private equity, the big pool of capital in hedge funds, the big pool of capital in Japan, the sovereign funds. I think those trends were there before COVID. I think they're going to continue to be there in going forward as well.
And maybe moving on to the ESG side, Peter, particular probably focus on the E. Can you talk to me about how the ESG agenda is impacting on the business currently, be it on the investor side or the debt raising side, just how much it's impacting you on a day-to-day basis now? It's clearly a huge issue and will increase in importance, but just curious as to how high on your agenda are ESG issues?
I think, they're very high on our agenda. It's something we think and talk about a lot. I think in terms of its material and immediate impact, you talked about investors and the different markets. I think everybody wants to know what your position is. They want to know what you're thinking. I don't think the market's got to a point of sophistication or differentiation yet where they can say, okay, this story resonates and makes a lot of sense, this story maybe not so much. So I think there's a bit to travel on that for the market generally. And again, I don't think that's unique to aviation or aircraft leasing, so I think that's a general sense. But it's definitely on pretty much everybody's agenda. It's certainly in our agenda. And I think the challenge for us as a business, and indeed us as an industry, is to ensure that it's, we recognize this is not something that will be solved quickly. It won't be solved by SMBC Aviation Capital on our own or anybody else. It'll be solved by the industry, and that's something we're going to have to work together on. And that's something we're very focused on. How can we work with lots of different stakeholders, the manufacturers, our customers, our financiers, all the different people. How do we work together to find meaningful long-term solutions? And it's a journey. I mean, from our perspective, we're doing things today, which is, we've got one of the youngest, most fuel-efficient fleets in the world, and that's a process we're continuing. We're 60% new technology today. I expect that to be 80% probably in another 24, 36 months. And that's something we're doing today for our customers in giving them the newer aircraft that are more fuel efficient and improving their are improving the environmental impact that their flying has, and that's a real thing. Then the second thing is, as you probably know, we launched a carbon credit initiative, which we've spent 53 million on buying really high quality, socially impactful, environmentally impactful carbon credits, and we're going to get some. I think we're seeing some real traction of that at the moment, and that's to mitigate and build that bridge until we get more long-term solutions. And then we're looking at, how can we play a role in the development of SAF? Challenging, but I think there's a role there for lessors, and particularly a role for big financial investors like ourselves. And then in the longer term, it's about technology. So how can we work with the engineers and the scientists who are, the women and men who are developing the technologies that are going to actually make a real change in this in the kind of the next 10, 15, 20 years. So it's about all those things, and we have to stay focused on all of them pretty consistently. But it's definitely on the agenda, Joe. I mean, as I said to somebody in the middle of COVID, in 5 or 10 years' time, we will not be talking about COVID, but we'll absolutely be talking about the environment, and that's the way it should be.
And maybe to pick up on a point which feeds into one of your earlier comments, Peter, just around the trading environment. In having these conversations, some view that market not functioning as well as it could, and that's a little bit coming out of OEM delays. It's a little bit maybe larger players hanging on to assets somewhat longer than they plan to do. Can I get your thoughts on how that market is functioning currently, and just what you think might need to happen to improve it?
Yeah, okay. And I think it's fair to say that the market probably isn't functioning perhaps as effectively or efficiently as it might have pre-COVID, but I think you've got a number of factors at play here. First of all, I think demand for aircraft remains pretty decent. I think, as I mentioned earlier, aircraft have done pretty well in what's been a very challenging environment, and things are improving, and demand for aircraft is fundamental demand for aircraft has been proven resilient, so I think it's driving demand. But then on the other side, you've got a more volatile interest rate environment and a bit of uncertainty there, and that's going to take a bit of time to find its balance. And then you've got the supply side of manufacturers. So I do think it's a little bit out of kilter, but I don't think it's a huge amount that's going to make it, that needs to get it back to where it was. My sense would be that once we have more visibility and stability, particularly in the capital markets and the financial markets, I saw this morning that the market seems to be a little bit warming up a little bit in 23. I think that'll make a difference. I think the manufacturers are getting a bit more predictable in terms of what they're doing. I mean, I think they're going to continue to have challenges in terms of supply for the next couple of years. And I think as well, as leasing companies, as business performance and lease performance improves, I think people's willingness and ability to trade will probably improve as well. So I don't think there's a huge amount that's wrong with the market, and I think the fundamentals that have driven it remain true. So I think that's, once we get a little bit more stability on a couple of fronts, I think it will probably get back to it's not that far off equilibrium, but get back to pretty where it was reasonably quickly, I think. And
can I get your perspectives then around asset values? I mean, there's clearly a couple of upward pushes, and that's around the general inflation environment, the demand environment we're in, which you've referenced, and then maybe there's a lag piece, as you say, on interest rates. If you've got a lease encumbered asset that's maybe pulling it one way. Can I get your thoughts on how you've seen asset values evolve over the last 12 months? And maybe a corollary to that, just maybe into the wide body market, interested in your thoughts as well.
Sure, okay. Those are two broad questions there. I think generally what you're seeing is definitely a stabilization and now a recovery in asset values. I think clearly with all that happened with the MAX and with the delays and with COVID and all those kind of things, I think there was definitely a downdraft on valuations. I think that's definitely stopped, and it's definitely turned the other direction. So I think value is going up. You're also seeing, these are hard assets. Inflation's a real thing. Escalation's a real thing. You can see it in manufacturers' escalation. You can see it in the parts that the engine manufacturers want to, when you're doing an overhaul of an engine now, things are more expensive. The labour is more expensive. So those things are really flowing through to our assets. So I think you're going to see real inflation in aircraft assets over the next number of years. And again, I think that's going to be enhanced or increased by both the demand side, because I think demand is, we touched on at the outset, I think the underlying things that have driven demand for air travel have reasserted themselves quickly. I think that updraft from the COVID recovery is going to continue at least for the next 12, probably beyond those months, as we see Asia getting back to normal. And I think the challenges that the manufacturers have faced are on supply side. They're diminishing, but they're not gone away. So I think you're still going to see. Both manufacturers are going to struggle to get where they want to in terms of rate and in terms of quality and on-time delivery. So I think all of those factors will present a more increasing, I suppose, upward momentum in terms of valuations for aircraft in the next while.
And feeding that in on your perspectives, does that hold true on the wide body side as well?
Yeah, I think to a point. I mean, I think the wide bodies it's a different market. It's a much smaller market. There's a lot less liquidity, and it's definitely lagging in terms of recovery. I think it's definitely much better today than it was, I'd say, at the start of this time last year. But it is going to be a step behind the narrow body market. I think wide bodies are, they have a real role in the aviation, but they're always going to be, less of them. I think the challenges the manufacturers face on the narrow body side are probably even more pronounced in terms of supply chain and industrial process on the wide body side. Like ramping up wide bodies is going to be hard. So I think there's going to be it's going to be a bit of a lag factor. But look, demand is definitely improving for wide bodies. There's no doubt about that. I think there'll be a bit more differentiation between the current generation and the new technology wide bodies. I think that gap's going to probably expand a bit as we go into this recovery. I think airlines are, particularly where fuel prices are at, I think they're very focused on if you can get good value on a new technology aircraft where you're getting a 15, 20, 25% fuel burn improvement. I think that's going to probably drive that gap a bit more. So, whereas I think the narrow body market is generally seeing a kind of across the piece recovery, I'm not convinced it's going to be the same for, say, older wide bodies of that's current older technology wide bodies.
And we touched on the OEMs a couple of times, Peter, as we've been chatting through, and the supply challenges that have been there. Can you talk to us a little bit about how the pandemic, or has the pandemic shifted relationship between lessors and OEMs? We talked about that deepening of relationships between lessors and airlines. Has the increase of lessors, has the importance of lessors increased from an OEM perspective? Yeah,
I think it probably has. I mean, look, the OEMs are ultimately, it's a duopoly. Okay, so their relationship with their buyers, there's two of them, and there's lots of us, be it airlines or lessors. So I think it's always going to be a different type of dynamic than you might have between the airlines and the lessors. What I do think, in my view, I think the manufacturers again have recognised that probably the most reliable partners they have are the leasing companies. I think that probably hasn't been lost on them. I also think that they recognise that the bigger leasing companies probably have more wherewithal just in terms of managing their order book and managing the placement and moving things around the place. So I think that's probably, again, a lesson that's not been lost. I also think, though, that the last, and not just the pandemic, but I think the last kind of 5 years probably now, I don't think the lessons and the events of the last 5 years have been lost on aircraft buyers, not just lessors, but where we've had multiple challenges with programs, delays, groundings, quality issues. So it's been a challenging time as an aircraft buyer as well. So I think both parts of the equation, both the OEMs and the aircraft buyers, lessors, are going to have to take those lessons away and figure out how we can best apply them as we continue to develop our relationship together. So I do think what you'll see in the next 1, 2, 3, 4, 5 years is that both sides will take the lessons of the last 5 years and say, okay, how do we, and that there'll be some push and pull in that. There'll be some things that we'll want to get and some things they'll want to get. And so I think it's going to be a different dynamic. Don't think it's clear yet exactly how it's going to play out, but I do think we've all learned a lot in the last number of years on the relationship between the OEMs and the aircraft buyers.
Peter, lots of interesting stuff there, and always great to get your insights. Just in closing, we've talked about lots of opportunities there, I'd say, and a lot of things to be positive around, but still in a very uncertain environment where we've come from a challenged place over the last couple of years. As we sit here in early January, looking out into the rest of the year, what are your optimism levels like?
They're good. I mean, we're just completing, as I just completed a significant acquisition, so we got a lot of momentum behind us as a business. We've got increased our portfolio. We got some great people in the business. I'm really looking forward to building out the integrated business and the team. There's a lot of talent there. That's really very exciting. And also, I think again, I come back to the point I made, Joe. I think Yes, there are challenges, but the fundamentals that have driven our industry for the last number of decades, I think the speed and clarity with which they reasserted themselves, I think very heartening, and which give us cause for optimism. Are there challenges? Yes, but I think, for a well-capitalized, well-backed, strong investment-grade company like ours, I think we can meet those challenges, and indeed, I think with those characteristics, we can also take advantage of some of the opportunities that are going to be presented. So I'd be, hubris, as my colleagues will know, people who know me well, hubris is always, I think, one of the biggest risks in business. So you don't want to get over your skis, you don't want to get too ahead of yourself. But I would be, prudently optimistic about the year ahead. Yes, I'm sure there's going to be challenges, but I think our business, our people, our portfolio has proven to be resilient over the last number of years. And I'm confident in those things. Our shareholders, our quality of our portfolio, the quality of our people, that we will actually, I think, do well in the 12 months ahead. I'm looking forward to leading the business in it.
Well, Peter, on that optimistic note, I would like, on behalf of KPMG and Airline Economics, to wish you and SMBC Aviation Capital a very successful 2023.
Great. Thanks, Joe. Appreciate it.